Happy Sunday. This is Stock Talk with Erik Anthony. Hope your guys' day went well. Just got done watching the game, so want to kind of keep this short and sweet. Just want to touch on a few things regarding this upcoming week, specifically with earnings reports, some things I'm noticing with some of our favorite YouTube accounts, some of the news that we're hearing right now, as well as Tesla and how that has kind of opened my eyes a little bit to other stocks in my own portfolio. But before I get into that, little tidbit, my son just took his first steps today during the game. So I'm on cloud 9 right now. That made my whole day. It was actually a really proud moment for both me and his mom. But yeah, man, that's just really exciting. Okay, anyway, hope you guys enjoy what I have for you. Let's get into it. As you can see here, some of the main that I will be looking at will be Redfin, Airbnb, NVDA, Shopify, and Palantir. I'm hoping that Airbnb can kind of give me an idea on what's like travel and lodge looking like. I'll be paying attention to their guidance. With Redfin, just kind of getting an idea of the housing market and what they say. With Shopify, it's e-commerce, so you'll probably get a good idea of just, consumer activity and where we're at with our economy in regard to buying. With NVIDIA, that would create a great opportunity to figure out, are there still going to be persistent supply chain issues in the future regarding chips? As you remember, NVIDIA makes chips for many, many things. So if you think AI, any AI breakthrough, many can argue that it's due to the chips that NVIDIA has created. And again, like I said before, I'll get into a deeper dive with NVIDIA, but for now, I just kind of want to keep it moving on some of the things that I'm paying attention to. With Shopify, another thing that I pay attention to is the relationship with the firm. So kind of get an idea. If they're doing well, then maybe that might help a little bit with the stock action, price action with the firm. Palantir. Obviously, we'll be looking at Palantir. As you can see here, Palantir is confirmed to report earnings at approximately 7 a.m. Eastern on Thursday, February 17th, 2022. The consensus earnings estimate is 0.04 or 4 cents per share on revenue of 413.99 million, and the earnings whispered number is 0.05 per share. Investor sentiment going into the company's earnings release has 65% expecting an earnings beat. The company's guidance was for a revenue of approximately 418 million. Consensus estimates are for earnings to decline year over year by about 43%, with revenue increasing by 28.5%. Short interest has increased by 42.3% since the company's last earnings release, while the stock has drifted lower by 49.3% from its open following the earning release to be 40.2% below its 200-day moving average of $21.95. Overall earnings estimates have been revised higher since the company's last earnings release. On Wednesday, January 26, 2022, there was some notable buying of just under 30,000 contracts of the $15 call and 29,000 contracts of the $15 put expiring on Friday, February 18th, 2022. Option traders are pricing in a 13.6% move on earnings, and the stock has averaged a 10.3% move in recent quarters. Okay, so another thing we want to keep in mind with earnings, just like we had seen last week with the firm, companies that aren't profitable, and if they don't do as expected, just expect this to be hammered. Not so much because of, the company, kind of going off the deep end or just doing something completely out of the ordinary in regard to their mission or what their business plan is, but more so think about market sentiment. What have we been hearing about all the past week? Russia, Ukraine, China, Taiwan, recession, World War III, Just again, like always, try to block out the noise as much as possible when you're thinking about your plays. Something that I found interesting over the weekend, as you can see here, with this graph, it's showing basically where the money is being held and where the money inflow and outflow is. It's very apparent. Where's most of the money going in right now? Banks. Where's the least money going into? Techs. So just keep that in mind. We are in cyclical rotations when we come to this market, and if the sentiment's bad, oh man, then some of your favorite stocks just might be hammered. Again, not so much because they're not doing what you envision them to do, or if they're not doing what they've said they expect to do over the next few years, but just because of inflows and outflows and just how these things rotate. If you've noticed for the past year, small and mid caps have been down almost 80–90% across the board. So nothing new there. No one can tell the future, but I would foresee if any company is going to miss just a little bit on any of their earnings, especially with all this fear and doubt and uncertainty in the market right now, then you can just imagine that a lot of your favorite stocks might even be hit even harder, especially if they don't surpass expectations. As you can see here in this graph, brought to you by BofA Global Fund Manager Survey, most of the money right now is in banks, energy, and materials. And look at all these peaks. And just like with anything that reaches a peak, it's usually a steep fall down. And the same can go with regard to inflation as well. Once inflation is peaking, it wouldn't be a dumb assumption to see it drop down very quickly. And hopefully that will come with supply chain issues being amended and with the reopening of our economy. Okay, so with regard to market sentiment and some of the things we want to keep in mind with our favorite stocks is that a perfect example that was brought to my attention over the weekend is, as you can see here, Tesla shares are only up 5% in the last 12 months, despite everything that they've done over the past calendar year. Only 5%. Now, if you think that Teslas should only be worth an increase of 5% over a year, then more power to you. Or if you think that that's just being affected by market sentiment, everything that's going on with the economy, supply chain issues, along with the fear of possible war, that's also something to keep in mind. The reason I bring that up is because if a $1 trillion company like Tesla could only increase 5% over a year, and look how it's fluctuated. It has gone to $1,200–1,300 a share to being in the trading in the fives at one point. So that's just a perfect example how these stocks can go from up here to down here, no matter if they're penny stocks, small, mid cap, large cap, or even $1 trillion companies, because that should at least maybe give you a peace of mind. Okay, if Tesla's only going up 5%, they're profitable and they're doing the things that they're doing and they're growing at the rate that they're growing, then you want to maybe just take that in consideration and be like, okay, so if my company that I'm invested in, or if some of the companies that you're invested in are not profitable and you can see them plunging, but they're still on course to doing what they expect to do year over year, then just, again, just kind of block out that noise. With regard to some of your favorite YouTubers that may be all in on one particular stock, I think that's great. Personally, I love, like I said, I do a lot of my own DD first, and then I go into the social media platforms and go on YouTube to just try to get as many tidbits and updates that I can after I've already done my DD with reading the financials and maybe listening to the conference calls and just kind of going over the overall business model by myself. After that, I usually do resort to kind of getting information from YouTube and, like I've said before, Twitter, Reddit, Google Trends, Google, all kinds of stuff. I just go everywhere to try to get as much information as possible. But one thing I want you to keep in mind, especially with regard to YouTube, and YouTube people is that for a lot of people, a lot of them want to give you up-to-date information regarding their favorite stock and their favorite company, and those are great. But personally, when you come to this page, I think I'm going to try to give you information that I find pertinent to my portfolio and to the sectors that I follow. But more so, I'm going to do it in at least in the most concise way that I can, while providing you some logic behind some of my decision making. I've noticed here on YouTube that some people can take 9 minutes to just explain something that takes 30 seconds. Other people can tell you that, hey, I'm getting more views than ever, and they don't care. As long as they're getting views for their stuff, then you are the product. You know what I mean? Keep that in mind. If you're not being asked to buy anything, then you are the product. So that's just something I always take in consideration. I'm starting to notice that a lot of our favorite YouTubers over time is exposing themselves or just their true selves, that I'm only here for entertainment. This is passive income. I'm only here so you can view. I just want to have as much clickbait as possible. And if you like my stuff, great. If not, oh well. But if I know that the world is about to end, then I'm going to make a 40-minute video on something that could take 5 minutes. Or I'm going to make a 9-minute video on a sale that was revealed for a fund manager. Something. So be cognizant of your time that you're putting into your DD, and be cognizant of the people that you're listening to that are trying to give you this information. Again, the reason, hopefully from this page, you get authentic information from myself. That's why I try to give you guys a little backdrop of who I am and just kind of show you what my day-to-day is like, because I'm an open book. I'm not really trying to swing you one way or another with regard to any stock. I just hope to bring you attention and bring you up-to-date information regarding market sentiment. Why I bring up Tesla is, as I was saying yesterday, the business is not the stock. Tesla's growth has been so exponential this year, and their stock has only gone up 5%. 5% in the past 12 months, despite all of the success that they've had and all the new things that have come, whether it's China, Germany, Texas, new products, higher gross margin.
Here's what I found.
Thank you. Siri bothers me, but whatever. Okay, well, that kind of wraps up what I'll be looking forward to for the upcoming week. Again, the reason I bring these things up is that I truly believe that as a long-term investor and you're trying to make your plays, pay attention to other companies and what their guidances are and how their reportings go. Because if you see companies across the board just getting pounded just due to minimal misses or even being profitable and still falling, that could at least kind of reassure you that, okay, the stock is not the business. Because, and I'll probably say that 100 times over and over, but if you can see companies across the board that, like I said, that are profitable but are still being hit, then just you can use that information to your benefit to kind of just tame your emotion and realize, okay, it's not just the company I'm in. It's not just my portfolio. It's not just these portfolios. It's across the board. And as time has gone on, this has benefited me because now it just kind of gives me a peace of mind on when I'm going to enter some of my long plays, or how I'm going to enter some new long plays as new opportunities present themselves. Because again, like I was saying before, when you're a long-term investor, you can create such a sizable position over time that as things go well and as expectations start to beat your own, if you can take some of that profit off the table while still maintaining a solid position, then go ahead, go ahead and do that. But if you're just buying at the highs, not paying attention to market sentiment, not paying attention to how other companies are doing, not paying attention to what other companies are saying in their guidance reports or in their conference calls in regard to upcoming guidance, I feel like it would be doing yourself a disservice with regard to your DD. So yeah, again, let's just hope that this week goes well. And like always, block out the noise. Like I said in my last video, they said that war was imminent, right? And don't want to get too political here, but again, keep in mind something. Money never sleeps, and the news is always on. You know what I mean? The way I think about it is once one story ends, another story begins. Once we lose one fear, another one will come. There's always going to be something going on with the news, but at the end of the day, the money's never going to stop. The money's always going to keep going. And that's why I like to pay attention to earnings reports, even for sectors that I don't personally have positions in, because it kind of gives me an idea as a long-term investor how this market is behaving. And this just helps me figure out, with the money that I'm saving, is it time to enter and buy more of my favorite? Or do we kind of foresee things to go lower and lower and lower? Again, can't time the bottom, can't time the top. But if you see things still on a negative downtrend, and it just gives you more opportunity to nibble. And hopefully you have a better idea of cyclical rotations, where some of this money has been allocated, where some of the money is not going, and just kind of think, are we going to always have all this money in the banks? Are we going to always be in a market that's just preserving capital, or are we going to get back to growth? You know, is the risk on or is the risk off? And right now it's very obvious in this market that we are on a risk off market. Preservation of capital is everything. Look at your 10-year interest rates, almost at 2, kind of around that range. And that plays an important role on many of our small and mid cap and high growth stocks. So again, that's something to keep in mind. Please keep in mind who you get your information from. Are they really telling you the truth? Or are they just trying to throw you fluff to try to bring in more people to view their videos? And ultimately, always remember, the company's not the stock. Stock is not the business. Money never sleeps, and the news is always on. All right? Well, for tomorrow, I will be bringing you guys some new information I see on our favorite stocks, including Bingo, Palantir, ABML, and Affirm. With regard to Palantir, as you saw with the firm, and as you've been seeing, if any type of miss comes up in these earning reports, be prepared for you to see that share price fall, and maybe be prepared to buy in if you feel highly convicted to do so. But okay, well, other than that, guys, try to keep it short and sweet. You guys have a great rest of your Sunday. And like always, thank you so much for hanging out with Stock Talk with Erik Anthony. And I'll see you mañana.